Hello and welcome to this video. Today I will walk through candlestick pattern examples on actual cherry-picked charts. You'll also see how to use candlestick patterns in conjunction with other technical indicators, etc. Let's jump straight into example number 1. In this example, we are looking at the spot gold price on a daily chart. We can see there was an uptrend on the price before going into a sideways correction. Now, at this stage on the chart, a candlestick pattern formed at a key resistance level. You can see the short-term uptrend, followed by the enormous red candle, which by definition is a bearish engulfing pattern. But, as you explore the potential trade setup, you will have more or less the following. Your stop loss will be just above the high of the bearish engulfing. Your entry, presuming you execute a direct market order, will be here. If your target level is, for example, twice the risk, it will be all the way down here. In addition, we have a support level here, and a 200 moving average to cross. So this trade setup does not look too good. Let's move on. At this stage, another bearish engulfing formed. The top is at the same resistance level as before. We'll have a stop loss here, entry here, and the target level roughly down here. Much better trade setup. The next major support level, which is down here, is roughly 4 times the risk. The next example we will be looking at is the Ethereum daily chart. At this stage, we have a definite uptrend and a pullback from a recent high. Furthermore, we have a bullish engulfing pattern formed on top of a key resistance turned support level. We can also see a lot of upwards pressure by looking at the shape of the bear candle that was engulfed in the bullish engulfing pattern. So we have strong confluence of the candlestick pattern on a key resistance level in an uptrending market. Here's an example of a trade setup, and there we go. If you missed that trade, here's another candlestick pattern, with a similar setup. We have a morning star, formed on a rising trend line, in an uptrending market. In this specific instance, your risk level would have been very close to your entry, with a massive upwards gain if you let this one run. Needless to say, this would have been a good one. The next example we will be looking at is the dollar-rand daily chart. At this point in the chart, an evening star has semi-formed. We have some form of resistance here, which is good. On the contrary, we are lacking a preceding uptrend, and we have a bigger support level right here. Hence, at this stage, it does not look like a great setup. But, as we will see, price did indeed break support and continue downwards. So, what's the lesson here? Well, it is not the end of the world to miss rallies like these. Rather celebrate the fact that you stuck to your strategy and missed a great trade, than not doing so and lost. The next pattern in the chart is a bearish engulfing, bouncing of a minor resistance level, in a now downtrending market. A great short trade right there. Next up we have a bullish engulfing, on top of a support level. Similar setup as before. But, on this one you would want to keep stops tight, as this setup will be against the current trend. Here we have another bearish engulfing, retesting the previous resistance level. Another great setup. And guess what, here's one more. The next chart we will be looking at is the silver hourly chart. The overall trend is upwards. On the chart, we also have a 50-period simple moving average, that you can see, acts as dynamic resistance. And what do we have here? A hammer pattern, of course. By now, you should be able to guess how the trade setup will look like. Here, we have a variation of the morning star pattern. And, another hammer. It is important to be able to identify candlestick patterns, however, it is absolutely crucial to interpret the meaning of the candlestick pattern given the market conditions the pattern spawned in. Before I go, I want to show you an interesting phenomenon. On the screen we have a 30-minute Aussie dollar chart. Here we have a support turned resistance key level, and a shooting star candlestick pattern. If we lower the time frame to 15 minutes, we see the shooting star is represented by a bearish engulfing pattern. Hence, these two patterns share a very similar analysis and interpretation. These examples, that were shown throughout the video, are just that, examples. The purpose was just to show that you should incorporate candlestick patterns within your strategy, and not trade these patterns in isolation. In my next video, I will delve into a well-known tool in technical analysis, known as support and resistance. So stay tuned if you're keen on learning more. Thanks for watching. Ciao.